session just after 3 p.m. July 10th. Hey, fun with AI today. Thought I'd share this just for fun. We'll get into the thumbnail here. Bitcoin at all-time highs, cracking over the 113K mark. We have S&P that eked out some all-time highs as well. We're trading at 62.85. Previous highs, if I'm not mistaken, were just on the 3rd. So July 3rd on that little Thursday bump right before we went on the holiday. I got up to 62.85. We just eclipsed that today just by a couple of points. So looks like 6,300 is trying to get there. We'll see if we have a surge going later in the day, maybe. We'll have 57 minutes. Directional plates we took today on daily profit play for profit grabbed 90 cents out of the max 115. So keeping about 70% of the max credit, which I'm pretty happy with, and we're out of the trade the last couple of hours. I want to have some just an observation here with AI. I thought this was interesting. So I'm just trying to get my headshot here to just change my clothes and just give some more like professional shots for some of my thumbnails. And what do I say here? Don't change the face or head, just change the clothing. And Microsoft Copilot says, got it. Your updated image with fresh clothing is coming right up, keeping the face and head exactly as they are. I don't know about you, but that face is not my face. That's my face. That's my Copilot AI face. So I got a little bit gummier, a little bit fatter wrinkles. Anyway, had some fun with it. And I love how they say exactly as they are. Apparently that's how AI sees me. So, you know, we're still not there yet, AI, I guess. Anyway, fun stuff. What's up, Kevin? How are you? Good afternoon. Come on in and say hi, everybody. Let's see how the daily profit play trade was going today. We needed it outside of this yellow box. We got there, grabbed a few bucks. That trade is done. Let me see what it's trading for right now. I'm just curious. Intel's up to 23.85. I do want to double check on some expirations that I have coming up. 535 is now trading for about a 515 or 520 debit, maybe a 510, 515, 520 debit, but above our bull put spread, which is nice. That's all we needed. Only about 10 or 15 points, and you're getting a majority of that profit versus waiting for it to close all the way at 4 p.m. and cash settle. So I'm still looking for a 63 by 63.05. If price pushes up today, we probably have to trade at like 63.02 or 63.03 for that trade to get filled. We'll find out. We'll find out. This trade obviously is going to cancel. That one didn't get filled this morning. We just had a directional day, Thursday directional day. So, all right. How's everybody else's trades going today? I put in a couple trades for my project options edge. I'm just trying to get, I didn't get filled on it actually. I put it out there to kind of let it marinate. I'm trying to get a big fat credit of $10 on a, I think I'm doing a 1-1. Doing a 1-1-1 trade on the QQQ and the SPY out to January below April lows. And I'm anticipating the market to pull back somewhere between 5 and 10%. So if I get those levels, I kind of roughly calculated the volatility increase plus a pullback in points and try to get an approximate credit. So we'll see if that fills. Those are pending orders in my project options edge. But if filled, it would be for me worth around $30,000. So it's worth the stab. I'll see if it pays out and pans out. All sorts of new targets getting sent out there in the world. So Goldman Sachs talking about 6,600 S&P. There's some target funds out there talking about 7,000 this year. They're probably all wrong. Nobody really knows. I just know that this market has not stopped and can't stop, won't stop. So I still like the potential pullback. I don't know what the reason would be, but earnings season is the closest catalyst we have. After that, we have the trade deadline on August 1st, which apparently isn't going to shift or isn't going to change. So I think that if earnings come in higher than expected, I guess it depends on if earnings revisions were made to like kind of set the bar pretty low. Because if the bar was set pretty low for earnings growth this quarter, it wouldn't surprise me if profit margins, especially in large tech, are better and revenues are still solid. and the markets are beating top and bottom estimates, and we still have like a strong earnings season. Is the strong earnings season priced in? I don't think it is. I think that the trade war stuff is kind of getting priced in. I think the Fed cutting rates 2 to 3 times this year is priced in. But I think there's still more upside that could be melting up. So I did take a loss today. I set up a longer term iron condor when we were up here after this U.S. China trade agreement gap. So we got to this area. I did an out of the money iron condor, and I went out for about 60 days. Right now, I'm at that trade at 21 DTE, and mechanically, it's threatening my call side a little bit. I still have some wiggle room. It was on the ES, so it was on futures, but my call side was 63.50, which is only 20 points away. Um, I'm not saying that price is going to just go through it and be a full on risk, but I was risking about $2,200 on the trade, and my call side is clearly being threatened. So rather than waiting 21 days and hoping that price comes back down, I just took the loss. It was about $780 today. So I'm saving myself a decent amount of risk. I mean, I'm saving myself about $1,400. And that's fair. Like that's also part of a winning strategy is reducing volatility and managing risk. So I just took the trade off because for 21 days, I don't want to sit and hope that it goes my way when we have to have a correction that clearly isn't showing an interest in correction. This market, even from the ceasefire, even since this pullback of the U.S. China trade agreement gap, this market doesn't show any real price action showing things are stopping. And so it may not be like a fast move to the upside, but every couple of days of just squeaking out new highs, all-time highs, making all-time highs, making all-time highs, that doesn't change direction, right? At some point, maybe this has to break. At some time, maybe this is the structure. I think this trend line is obviously way too aggressive. So you find something here like post US China trade agreement, plus that pullback on the ceasefire, like that low, that low. If that structure breaks, then sure, maybe there is a price correction to watch for. But until then, not. Right. Let's see here. Bullion, you consume the practical options. Very good. Very good. Nice, man. Glad you liked it. And thanks for picking it up. Perfect. So I'm looking at some fresh highs today, 344 new highs in the portfolio. Melt up continues. Hedges are there if I need them, if the market decides not to cooperate. Expiration wise, not a lot to prune right now. I still have some end of July, not a lot of super short term. So nearest expirations here, waterfall income on the Qs right there. And I should have waterfall income on the SPX as well, right there. That's up 80%. The Qs, this is up. Let's see here. I've got that near-term one that's a hedge. That's probably going to be a loss. Maybe I'm down 40%. I'll see. We got to fall 14 points in this one. Maybe. Is that it for expirations? I thought I had some SPY. Did I close it on my waterfalls? Oh, hang on. Let me go to the whole account. Doy. There we go. UNG. Tomorrow's Friday, so I've got the UNG sell call on my diagonal spread, the 5x17. I will continue to roll this. I might just do this now. 99.4% of profit is in my hands. $156 on 1, 2, 3, 4, 5, 6, 7, 8, 9. So 156 times 9. Oops. So about $1,400 on the diagonal spread. All it does is lower my debit. Let me see if I can roll this. Try to keep it a little bit down the road. So maybe July out to the end of the month. See if I can roll this. So I can roll this to the 1st of August for 18 cents. Roll it to 16.50. Let me see. I think my break even is around $14. My break even is 14.45. So I could roll it down to about 16 if I wanted to. Still grab 37 cents. Roll it to 16.50. That would give me just over $2.40 profit if we get a spike up to 16.50. I think I'll just do this. Let me see if I can roll it a little bit higher here, 27, 28 cents maybe. Let's try this one. So roll to 28 cents at a 16.50 out to the August 1st deadline. What's the expiration on my? Okay, so I have out to January. So this is out to 2027. I've got plenty of time on that. That was a 2-year leap. All right, let me see if I get 28 cents in this one for another 20 days extended. 28 not filling, 27, 26. I'm moving my strike bound by 50 cents. Let me go. Actually, you know what? Let's go. Damn it. All right, so August 1st, that's fine. I'll just keep it there. I was going to roll that out to August 15th and get a few more bucks for it, but that's fine. All right, so UNG roll, which is the July 11 to August 1st, 16.50 for 26 cents credit. All right, let's do some rolls. So this July 11 can roll out to August 1st. All these are 17s. So 16.50 for 26 cents. Okay, so roll that one. Leave that one pending for 26. 25 should fill. Okay, it filled at 25. All right, still working on this. So the first 16 for 25. Okay, almost there. Looks like I've got 2 more here. Okay, and this should be the last one. Okay, so all the July 11th are closed out. I've got 16.50s out to August. 1, 2, 3, 4, 5, 6, 7, 8, 9. Now I'll do the math and update my spreadsheet. So that is rolled to August 1st, 16.50. So call for 25 cents. New break even would be 9.20. Price break even would be 14.20. Okay, so 5. Oh, 5 dot, okay. 5 plus 9.20 minus 16.50. There. So if I can get out of the diagonal spread, I'll still make a couple $1,000. This has been in a bit of a like downturn. I mean, UNG has come back down for a bit. I mean, I don't know if we're gonna have like a big squeeze on here. If there's a chance I could time this where I can roll it and still keep the income coming in on that sell side, I will do that. But just some activity there for one of these expirations. I get rid of that now. Now I can go SPX. These should be waterfall trades. These are all looking for full profit here in the next 8 days, up 96%, 96%, 96%. Those are all good for income. I'll let those close out for full profit at expiration. Tesla closes expiration on the 18th, 8 days out. I have a put and I have an August 5th covered call. Qs, hedge. This one is a 111. That's a waterfall income. Bull call spread. All right, watching those. SPY, naked put. It's up 50% right now. I sold that during April. Just going to sit on that for a while. That's right at the lows. I also put in a new trade today, pending order. The 480 by it's a 485 by 40 ratio spread on the SPY for $10. Right now it's trading for 360. I'm looking for maybe a correction in a vol spike to get that up towards like I'd be willing to take like $7, $8, $9 credit. I just put a pending order at 10 in case we have like a big vol event like we had last summer. Do you see divergence? Of course, I see lots of it. I've been talking about that quite a bit, actually. So divergence meaning that you've got higher highs in price and momentum disagreeing, relative strength disagreeing. Let's talk about that. I'll bring up a workspace here. Let's go. My workspace is harmonics and pivots. It's a pretty messy chart because I put a bunch of crap on it, but I'll walk you through the forest here. So the daily chart is still looking for a zigzag top. The weekly chart is still looking for a zigzag top. We've had a huge rip here. Again, it doesn't mean that we're going to automatically pivot, but it's looking for it, which means that it's going to be harder for this market to keep pushing higher. Like there's a repaint right here from this initial high, and then the zigzag was looking to go down, but it repainted. So on the bottom side of this is a daily chart with relative strength and momentum. So for divergence, I'd say yes, we have highs, 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 highs in price. So higher highs in price. Okay, this is how simple. And again, divergence doesn't mean it's like the top. It just means that we probably should expect a pullback coming at some point. So we have higher highs in price. We have lower highs in momentum. We also see that we have some disagreement here and overbought conditions. This is a relative strength 14 and 21 period on a daily time frame. We are getting some hidden bearish divergence on momentum and RSI with some overbought conditions. So to me, that is a technical reason for the market to at least show a bit of a rollover or a bit of a pullback. Okay. The weekly time frame, however, let's see. Okay. The weekly time frame is now starting to show. This is the RSI 14, I believe. See if I can. Yep. So the 14 period. So I've got a 14 period. The 14 period is. Oh, let's make this a little bit smaller. The 14 period RSI is overbought. The 21 period is not overbought. So it's close. Okay. But on the weekly time frame, we're not sitting here at these highs in momentum. We're not showing obvious disagreement in momentum. Last time we were up there, it's like we saw the RSI 21 and 14 way above the 70 zone, way up there. So, is it possible we just have this like little bit of like the market's already been thrusted, right? We had like the US-China trade agreement gap kind of put, it was like a thrust of momentum, and then the market drifted higher. And then the ceasefire was another thrust of momentum, and the market drifted higher. Earnings could be that final thrust again to like propel the markets higher, or earnings could be the reason that the thing turns. I don't know. I would imagine that guidance isn't going to be terrible. I mean, if I'm seeing Goldman Sachs raising their forecast for the S&P target by the end of the year, I mean, we lead financials. I mean, all the big banks are reporting the first week of earnings, and I mean, even Delta today was up like 14 or 15%. So, I mean, so far it's like markets doing what the markets do, and path of least resistance remains bullish. But I see the technical signs. It's just not ready to turn yet. Okay. So anyway, weekly chart is getting close, but it's not quite registering like multiple overbought conditions. Daily, however, is like screaming. Weekly has a nice zigzag at the top. It just hasn't turned yet. And the daily, same thing, like repainting, but a lot of overbought conditions. If you go to Qs, okay, let's go QQQ. Same thing, zigzag is still printing, looking for a top. Relative strength is overbought with some divergence. You can see that pretty clearly on the daily. Relative strength, momentum. So prices are trying to make higher highs. Relative strength, momentum disagreeing. That's on the daily time frame. You go to the weekly time frame. Okay, weekly time frame, not overbought. So we don't have any momentum disagreement right now. We don't have any relative strength overbought conditions on the weekly. So could it still keep melting up? Yeah, it could. To where? To when? I'm just, look, I can give myself a window. If I think we're going to have a correction in the market, it's like anytime now until probably end of September. I think end of September, early October would be where the market at least incorporates some type of correction. 3%, 5%, 10% would be a little bit nasty, but we could certainly have one. I mean, considering the market has been up off these lows, I mean, if I'm not mistaken, the Nasdaq's up like 30+% off the lows, isn't it? It's up almost 38.5%. So a little tiny 3 to 5% pullback is nothing. A little 5% pullback is nothing. If we just had a big fib swing from low to high, if we just pull back to a fib zone, we pull back to all of this support, give us something, right? So is it a high low flush, lower high, lower low flush, and then the market finds a bottom from there? Or is it just one big dip, the market just instantly buys that level, and we stall around here, and we still propel and break out and go higher? Price action can play out a lot of different ways, but this is what's been hard for me to watch. Like, I can't just sit here and say, like, I'm gonna buy these tops. I hate buying these tops, so I'm not buying these tops. What I'm doing instead is I'm positioning for income positions way the heck down here. And I've got hedges also way the heck down here. So if the market wants to come down to me, I'm going to own it cheap, or I'm going to get paid on some hedges. Otherwise, I'm going to make a bunch of extra income by the end of the year. So I've got November expirations, December expirations, January expirations, all for these lows, which I don't think we're going to necessarily hit. Indexes are drifting higher today. The VIX isn't showing the same momentum. Yeah, it's just one of those days where it's just a lack of correlation. Like the VIX is slightly down. VIX, I mean, for the most part, VIX is sideways today. VIX is down 1%, but the markets just drift higher. And the Nasdaq didn't make a new high today. The Nasdaq started off high and faded hard and it's been fighting back all day. If you go to the SPY today, what's the SPY done all day? The SPY faded initially and then started to rally. S&P is actually one of the better performing indexes. Dow's up 0.59%. SPY's up 0.38. Russell up 0.80. Nasdaq is down. Interesting, right? So, yeah, it's an odd mix today. But Russell's up. That's cool. Dow's up more than S&P, and Nasdaq is lagging today with flat, down negative 0.5 or negative 0.05. So it's pretty much flat for the day. Yeah, but VIX didn't really go anywhere. So just an odd correlation day. Currency-wise, Aussie strong, New Zealand strong, Euro weak, Swiss weak. Started to stretch a little bit more out of volatility this morning. This is around 10 o'clock in the morning. Aussie continued to get stronger. So did New Zealand. Did China have anything through the flows this morning? Not really. Nothing. I mean, I'm just looking at like currency pairs that are just tied to risk on, Aussie, New Zealand. China's up a tiny bit on the day. Nothing impressive. What else? Let's go to Brazil. Big pullback in Brazil. Pullback in Latin America. Mags almost up to fresh highs. Apple still hanging in there. Amazon. We're going to see if Amazon can get to these highs. It looks like their Prime Day was down like 40+% compared to last year, which probably isn't a good thing, but I still like the ratio spreads on Amazon. I still like the forward productivity and efficiencies and automations and energy, AWS, all that stuff on Amazon. So still one of my buy and holds. Broadcom. I'm looking to see if Broadcom can come down just a little bit. Overbought conditions with divergence give me a little pullback. Hopefully this happens before the July 18th. I will be upset if like this trade works out after July 18th. That will be pretty annoying, actually. Yep, Bitcoin is up to fresh highs today. That was today's thumbnail. Bitcoin all-time highs. We saw it happening yesterday during our session. It was up. I mean, yesterday's like 1 or 2 hours before the close was pretty substantial. Nice push on Bitcoin, and then carried it to today's trading. And yeah, we breached those highs at 112. Yesterday we hit like 112.040, and then I think we're up above 113. Meta still sitting around the all-time highs. Microsoft around the all-time highs. Netflix has been pulling back a little bit more. Netflix has earnings in a week, next Thursday. Nvidia 163. I mean, part of me thinks that the S&P is getting dragged higher because Nvidia is still pushing higher. Tesla at 308, fighting back a little bit. It's totally fine. Income trades on that. Berkshire Hathaway just below the 200 moving average. Bonds actually catching a bid these last 3 trading days, down to 85.50 up to $87. I still have a covered portion of my diagonal spread. Let me go here for bonds. I have the 65 by 89. This is out to I'm up 86% on that sell side. So 1, 2, so is that 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, $1,300 in income on the diagonal. It's just trying to lower the cost basis to add to my bottom line. If we get called away 89, I am totally going to take it. I'll be up something like $16,000 on TLT when it's all said and done if I get it called away. Otherwise, I'm just going to keep rolling this call maybe out 2 to 4 weeks at a time and trying to get rid of this thing before by the way, this diagonal spread is all the way out to 2027. I'm just not trying to trade this thing as the bond market. If it enters a bear market again or breaks fresh lows, like I don't want to sit here and hope the bond market catches a bid. FTSE all-time high today. Very nice. Very nice. DAX has been phenomenal. Yep. A lot of non-US still performing well. US is fine. I mean, all-time highs in the S&P. We recently had all-time highs in the Nasdaq. But yeah, the DAX is doing well. The FTSE is doing well. So you got Eurozone and UK doing pretty well this year, outperforming the S&P by a decent amount, decent margin. But it was also, I mean, that was the whole idea of like American exceptionalism. U.S. stocks have outperformed the world, blah, 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 for all these years and by 3 standard deviations, and all of a sudden it changed. So it's a bit of a reversion. It's also just cheap valuations. I think the entire Eurozone was at like a 12 to 13 times earnings. The U.S. is at 22 times earnings. So if you just want to park money where it's cheap, throw money at Europe. I've got SEHY that's going pretty well. I'm trading the DAX as well. That's doing fine. Yep. So, all right. Anyway, that is coming up on TLT. I'd like to see if this thing can get above $89. Chart alarm is set at 89. 10-year yield up a little bit. 20-year yield flat. 30-year flat. Average mortgage now 6.72. Futures, sectors. Let's look at China really quickly. Alibaba's up slightly. Baidu is hesitant. I did close out a trade this week on Baidu. It was a 250 credit spread that I closed out for $1.37. It was like 45 or 46% of profit. And I still like the technicals. I still own shares of Baidu. I'm looking to see if we have a run up into like 103. I've got a measure move up here towards 115 to 116. FXI still holding some shares. I will dump these shares if we get above $38. KWeb, I still have some shares. If we get to these highs at $38, I'll dump the shares. JD, I'm still holding shares with a 36 call. My break even is way lower. Let me find my break even on JD. My break even on JD is 33.78. So I might roll the call down a little bit, try to grab some premium. Schwab dividends doing better as the Dow's catching up. Schwab growth at highs at a recovery. I bought this thing on the way down at 26 and down here at the lows at 22.50. So 26 and 22.50 dollar cost average levels. Pretty good run to the upside. That's the market breadth. We have almost 72% of stocks in the S&P above the 50-day, almost 60% of stocks above the 200-day, 80% of stocks in the Nasdaq above the 50-day, 71% of stocks above the 200-day. Costco, I'd like to see. I mean, a pullback in Costco wouldn't be bad. I'd love to do like a ratio spread or 1-1-1, but I probably won't. I don't really want to own shares that, I'll do this. If we hit certain levels, I'll just dollar cost average into Costco. I'm not going to put an option trade in that's going to tie me up for, $80,000. Walmart's down a little bit. I've got a collar here, $100 in my covered call. Nike doing pretty well. Put a lot of puts in here on the first sell-off down to these. It's basically back to COVID lows. Here's your COVID low at $59. I put in a 55 by 50 by 47.50 all naked puts, collected $500. So this is out to the end of the year, but as long as Nike stays up and elevated above $55, then I've got a handful of accounts that'll make that. That's good. Home Depot, Lowe's, nothing. MasterCard, nothing right now. Visa, Amex, nothing. Visa and MasterCard have pulled back off these recent highs. I wonder if Amex will follow. Maybe it will. I'm not going to force a sell trade here. Johnson & Johnson looking better. I've got some puts at 130. Progressive, what is happening to Progressive? Dividend announcements. There's some news in here. Maintain, hold, adjust price. So 280 from 291. Okay. I mean, I've got let's go PGR. I mean, Snowflake looks okay. It's not really expensive on price to earnings. Fair value nearly $500. It's like, I mean, it's got a discount. What up with Progressive? So it's down from recent highs around 15%. Hopefully you have a little snapback above the 200-day and again to resume all-time highs. CB, similar. I wouldn't mind this falling a little bit lower and maybe doing some ratio spreads on it. Palantir, volatile near the top, but still hasn't gone anywhere. Got some ratio spreads in this one as well. HIMS, $40 on a big news. This was what was this? Something to do with like Ozempic, right? Something came out where it's like they can't do Ozempic the same way or whatever, so the market dropped it like 30%. That was a drop of 35%. You bought the dip, you're up a few bucks. I've got ratio spreads on HIMS down into the low 30s. Carvana, CRM, O'Reilly, Uber up to some fresh highs. I love to see Lyft get a little bit of that love. Sector-wise today, XLC is down. XLY, you got consumer discretionary up. XLP for staples is up slightly. XLE up. Financials up. Earnings next week for financials. Healthcare up. Industrials way up. Wow. Way up here. That is running hot on industrials. Basic materials also running pretty hot. Maybe just adjusting a fib for a pullback. This is pretty inefficient to me. I'm not saying I want to be bearish. I'm just saying if there's a chance to buy a dip, a pullback into this area would be pretty good for XLB to be positioned for some support and then take this up to hopefully all-time highs. But I think a dip would be great. Markets are terror fatigued, probably. I was terror fatigued after like April 12th, I think. Real estate sideways, tech making a big comeback, utilities up a decent amount of utilities today. Aerospace defense, just watching this ETF. Currencies, Aussie CAD up. I mean, I'm long this pair, but my gosh, I just wanted an 87.50 pullback. It's not too hard to ask. Aussie Swiss, nice little pop today. Aussie yen, Aussie New Zealand. I'm still long Aussie New Zealand. That's good. Aussie dollar. I'm not long in this one. I missed my opportunity to buy this thing on the dip around 6,400. But I was long back here. I was long for profit earlier. I didn't get that double bottom like I wish I would have. CAD Swiss, waiting, see if we end up making like a bottoming formation. CAD yen, nothing. Swiss yen, nothing. If the trend line breaks, maybe look for a pattern trade. Euro Aussie, right back down. Euro CAD, probably topping a little bit, maybe a range trade like so. Connect the highs, connect the lows, see if this wants to come back down a little bit deeper. Euro Swiss, nothing fancy. Euro pounds, a lot of noise, but not really going anywhere. Still trading between a couple hundred pips. Euro yen, overbought conditions, not quite at the highs. I wouldn't mind seeing this thing somehow find a way up into like 173 to 175. Look for a big topping pattern. High reward to risk if this thing rolls over at equal highs. But we might roll over sooner. It might be something like this where it comes down first, up for a divergent top, and then sells off. I don't know, maybe. That's a big change of the yen if that's the case. That'd be like the market is running into a brick wall if the yen's going to turn like that. Euro New Zealand down slightly. Euro dollar, meh. Pound Aussie back to equal lows. Pound CAD turning nicely. Pound Swiss, if you want to buy low, there's a good opportunity just to range trade this back to 12. I like 13.50 for my profit target. Pound yen, just a slow grind to the upside. Pound New Zealand, maybe a range trade in here. Tough one, but maybe a range trade if we can bounce it off of like 2.22. Pound dollar, nothing yet. Haven't broken a recent low. New Zealand CAD, totally sideways. This one I've got dollar cost average, so I'm in here. I'm ready to buy the 5.0. I'm ready to buy the 7%, 70%, and stop losses below the swing. So 1, 2, 3, and I'm trying to take this back up to these highs. 85, 85, 50, 8600. I've only got one trade in of the bunch. I haven't been filled on trades 2 and 3 yet. Not yet. New Zealand Swiss. Would love to see a run to this 200 moving average. And then more. A lot more, actually. New Zealand Yen. Whatever. Maybe it's going to run higher. I don't care. New Zealand dollar, open space. I mean, I kind of want to keep buying dips on New Zealand dollar, but this is my stop loss. So if you want to buy dips, you got to buy small and be willing to add more. Otherwise, if it's just a steady little trend, it might just trend and eventually hit, 63.50, which is a nice resistance level. Dollar CAD at 36.68 hasn't really done anything. If it breaks the trend line, I'll keep an eye on this for maybe a move back up. If it works its way lower, that's fine. I'm not selling this. I'm just going to wait. I'll buy it at the lows, wait for a trend line break. Nothing yet. Here's a tweet. The stock market is basically priced in all tariffs. Has it? All right, here's a funny tweet. Stock market is basically priced in any and all tariff news apparently need a new catalyst to go down. The only thing I can think of is the following. Nothing. Meaning nothing is going to stop this market. Yeah. Something will. We'll see. It's going to be weird if whatever it is. Maybe it's August 1st. Maybe it's the deadline. Maybe it's a flop in earnings with Mag 7 running hot. Maybe NVIDIA disappoints and it loses that $4 trillion market cap. Can you explain why UNG is hovering around? Just because it is. UNG is called the Widowmaker. Natural gas is called the Widowmaker. It is such a tough market, and it has been in a bear market, a savage bear market for a while. So once we peaked out here in 2022, it has been just all down, all garbage. I would say best case scenario on natural gas is I'm starting the process low enough and late enough that, I'm out to 2027 here. So I have time, even if this thing just goes down and then back up to range highs around $24, that might be enough to just get me out of the trade with income. The big picture move would be like, oh my God, this thing is just going to go bananas to the upside. Well, on a diagonal spread, I'm probably not going to get that trade. I'd love to say I'm going to, but I'm probably not. So realistically, I'm just working my cost basis lower and lower and lower. The nice thing is I don't think we go too much lower than this level. So lows around, about $13, $12.50 to $13 lows. If we, find support there, there's room to squeeze this thing back up into $20 to $24. If I can get lucky on a timing play, or maybe I just, sell calls and sell against my diagonal spread and take a debit that's now down to 9. This is now a 920 debit. And I have the 8/1 expiration. Okay, so I'm selling the August 1st 1650 call with a $9 debit. So that puts my break-even price point at 14.20. So if I can get lucky and have this thing push higher, I can try to keep my sell calls out of the way to grab some more upside here into the 20s. That's if I'm going to get lucky. Funny you asked that, whoever check it out is. Mark, I actually put a pending order in MRK today. I didn't post it because I haven't been filled on it. I've got a pending order. So I'm putting this in for my Project Options Edge, but I do like Merck. We're up on some news today. There's like a $10 billion buyout or something like that. I think it's basically a merger or a takeover. But I looked at a ratio spread out to January, the 75/70, but it's trading for $1.15. I'm like, well, that's okay. If we get a pullback though, I'm looking for an income trade of 250. So I do have a pending order at 250, which means price would just have to dip a little bit. We dipped to right now we're trading at what? MRK is trading at $84. If it pulled back to $75 or $70, or even like, I guess, low 80s. We'll like to $80. Maybe I can get this thing filled. And I like the trade. Any reason for the bear market on it? Oh, I don't know. I mean, to me, it looks like it's just kind of carving out a bottom and getting out of a bear market. I mean, I think we've got a pretty reasonable pullback. We're coming into some major multi-level support. Like this goes back to COVID support in 2020 support. I mean, if we pull back to these levels, this is why I'm doing this ratio spread with the 75 by 70, because this level would be a great spot to say, look, if I own shares, I own it at 70, I get a $5 buffer plus my credit. I'd own the shares around 63.50. So I could repair it when the fair market value on this thing is like up into the hundreds. MRK, I mean, Snowflake checks a lot of boxes. It's not terribly expensive, and fair value discounted cash flow of $200. If I own the shares at $65, I got a fighting chance to see it go up. So I don't know. I don't know if it's a post-COVID run, if it's Robert Kennedy Jr. and Trump and just taking the healthcare. I don't know. It's a lot of things. I haven't done the research. To me, this is not a trade based on the fundamentals outside of this stock is beat up. Fair market value is good. It's cheap enough price to earnings. And I think healthcare is going to find some lows. I think it's been kind of overshot in a bit. I think UNH was a bit of an overshoot. I think for the most part, healthcare is still a big sector and a much needed space. And there's a lot of growth potential in healthcare. There's also a lot of AI potential in healthcare. Okay. I think the hard part about healthcare is the potential policy threats. Are we going to cut benefits for tens of millions of people in the US? I mean, that's probably rough for healthcare. Or is it? If they don't have to pay benefits anymore, it's like nobody's on the hook. But I just think policies. Sorry. I was on Merck. My bad. Okay, so let me finish this. So MRK, to answer your question, whoever check it out is, yes, I do have a trade pending on Merck. It's a 75 by 70 ratio spread, pending order at 250 credit. It comes back to these lows from 2020. If I get filled, awesome. If I don't, okay, no big deal. If this thing runs back up to like $90, I'll probably just cancel that trade. Any reason for UNG? I mean, probably just all the oil drama. I mean, oil was up 40+%. It got smashed 20+%. There's a lot of volatility and uncertainty. Demand for natural gas is probably at its highest. Natural gas demand is crazy high because the markets are looking for basically, this AI build out, this AI, data center building, all the computing power that's needed. Natural gas might be the quickest onboarding until we get into like the nuclear space. So natural gas is kind of taking the realm, or taking the reins of like what's being needed the most. What's the easiest onboarding to get the energy and the efficiency we need. Natural gas is working for us. So I think that's what this big pivot was. This is March of 2025. Let's go to oil and see what oil has done since March. Since March of 2025, I mean, oil down, big spike up, back to flat. I don't know. I just think we're using a lot of natural gas. So I think it's still supply and demand elements. However, looking left on the chart, I don't think natural gas necessarily goes too much lower. That's kind of the nice thing, is that's why I started the diagonal spread, is if this was going to be a bullish pattern, we're still pulling back into the same levels. This is my left structure. This is my right structure. Does this market have a pattern in it to get back to highs at 24, maybe higher? How about a big fat inefficiency? How about a new trend, right? If the market can make a 1, 2, 3, wouldn't that be lovely off of these lows? Maybe. So that's my thoughts. That's why I'm into the diagonal spread out to 2027. Give myself plenty of time every 3 weeks or 4 weeks or 30, 40, 50 days, trying to just sell a call and lower my cost basis. Gold, anything here? Not really. Silver's having a pretty good day. Bitcoin having a great day. Bitcoin's now up 2 days in a row, pretty strong, creeping up above all-time highs. So pretty nice 2-day break. Give this thing, like, what's the weekly candle do by Friday's close? I mean, so far, breaching highs. So like if the body of the candle stays here through these wicks, like that's a pretty compelling sign. Like this might be more buying pressure. This might actually run some of those. I mean, what would be interesting would be, I think there's been a lot of suppressed price action on Bitcoin. And if all of a sudden we get a pop to the upside and it runs through these liquidity levels, all those sell pressures, all those calls, kind of runs through those liquidity levels that would be sitting at the highs, I think we could have a short squeeze. I think we could. I mean, I think we. Well, I don't want to call it a short squeeze. I think we just have a pop through those levels, and this could really accelerate. So I am all for running uncovered right now. So I have downside protection, yes, but I don't have anything covered on the top side because I'm not trying to cap my gains. I'd love to see Bitcoin go higher. And so far, so good. Still, BITO is making a nice turn. It's up some bucks on the day. So I'd like to dump this one. I mean, I've got about a $21,000 position in BITO, but I'm happy to let it go. I mean, I've got a 53% yield on it, but it's been going down in price and depreciating. So I'm happy to get this one, at some profit and then let it go and use that capital to probably throw in IBIT or FBTC. I added this one 2 days ago. This is Ethereum. ETHA is in a Ethereum ETF. It's up $2,000. Yesterday it was up like $1,400, so a little bit more upside there. And then IBIT running uncovered and up around 65K. Still running. And my gold is running, my silver is running, stocks are running. Keep on running. Okay. All right, so we're good on UNG. We're good on Merc. Good on Bitcoin. Good times. So yeah, this is exciting. Whatever it means. My measure move on Bitcoin is up here towards 132. 132. Do I want to take profit there? Kind of. Part of me does. 1, 2, 3, 4, 5. Very possible that, this level to this level between like 130 and 145, 130 and 145, a pretty good profit target on Bitcoin. So we'll see. All right, what else we got going on here? Let's go to the DAX. Shallow, tiny little pullback. This was not enough for me to say I'm going to buy this thing at a 23%. I was hoping for a better pullback, but I could have also said, okay, 23% into a 50%, having some kind of the reserves like dollar cost average. So level 1 and level 2 obviously did get filled at both, but like level 1 back to highs. It's a good trade. Percentage wise, it's back up to highs. That is a run of around 6 to 7%. So, I mean, I'm kind of hoping there is a pullback here. I'm really kind of hoping there's a pullback, just to give buyers a chance to accumulate something else. But I don't know. So I'm just not chasing highs. It's just I'm not. I've got puts in. I've got shares of FEZ. That's about it. FTSE, big run to the upside on FTSE. So maybe this has legs up to the 1.8 extension, then maybe pulls back again, but still bases. Maybe a broadening pattern starts from here. So I'm mildly cautious on just like how high these things are going to stretch without having some type of pullback. If I see lots of divergence on a daily and weekly time frame, I'm cautious. I see extreme greed on the CNN. Fear and greed index. It's extreme greed. I'm cautious. Okay, those have never been like a signal or a timing indicator, but certainly just to protect your positions, move trailing stop losses, sell premium, sell some covered calls, something. Just have something protected. BLK is at BlackRock. I mean, what's up with BlackRock? It looks just like the. It kind of looks like the Dow, to be honest, or the S&P. I mean, here's your. Is this your ceasefire? You've got your U.S.-China trade agreement gap, your ceasefire. I mean, this thing is just hot. Earnings next week on Tuesday. I mean, it's hard to look at an earnings like this and say, oh, this thing's going to blow off the top. It's like we're already up 42% on one of the largest asset managers in the world. So I mean, what's up with it? It's just the reflexive recovery like everything else is. So everything good, like BlackRock's good. BlackRock's got a hat in the ring with Bitcoin. They got their hat in the ring with real estate. They're in the markets, obviously. They got all sorts of instruments and ETFs. They have trillions and trillions of dollars. So we'll see. I mean, do I want to buy it? No. It's $1,100. What am I going to do with that? Maybe trade an option on it. Maybe. Nothing right now. Okay. Anything else for today? Let me check and see. Is anybody still in a daily profit play? Hopefully you're not. You shouldn't be. We are pulling back a little bit. We're at 62.75. We need a price to stay above 70. So right now this trade is trading at about 545, 535, which is just a little bit equal to higher than what we closed it. But I want a price to stay above 70. We got up to 90 today. 62.90 was the high, enough for us to grab a good chunk of profit, keeping most of the profit today. I think I pulled out 90 cents out of the 115 max. So nice little win there. Just grinding away. Waterfall income should have some profits by the 18th, profits by the 31st. Had a winner yesterday that closed out with us in this live session here for my pinch point. Newsbreakers will start getting very active here the next week or two. And daily profit play just continuing to grind. So yesterday, between yesterday's close and today, back to some fresh highs. And percentage, I mean, we're hitting about 92% winners right now on daily profit play. I also got a notice from the team at Dynamic Trend, which is a software that I use every single day. They are going to be updating their liquidity and gamma level features to allow this to also show strictly 0 DTE and not have a 3-day weighted average, which will show me so for example, let's say the market is like selling off hard. What will happen is there's a 3-day weighting average because this, and when I say weight, I mean WEIGHT, a weighted average. Because if there starts to be some heavy hedge flows in here, then these bottom liquidity levels start to fill up. And so this will show 3 days worth. But what I've asked them to do is also let me toggle it so I can show just 0 DT. I just want to know where the big levels are today, because the ability to see like just the big levels today, measure out my tops and bottoms for the rule of 16 can make me pretty dangerous for some day trading. And we've been doing that quite a bit in daily profit play and doing really well. So that's been a good thing. All right. So, okie dokie. I will let you go. If you'll do me a quick favor, everyone watching, whether you're watching it live, I appreciate y'all being here live coming out for this final hour session. Just that little thumbs up button every day goes a long ways. We're sitting around 9,400 subscribers right now to the channel. If you let me know you're here, you let me know you like the video, that is a huge, huge, huge boost to the algorithm to just support the channel, support the content, kind of give YouTube a reason to promote my content so we can come back and do this every day and get more people in, help more traders. So just a little thumbs up goes a long way. Can you comment on the S&P and the Nasdaq 50-day moving average index and the 200-day? Sure, they're just indicators, price-weighted indicators, but what you don't see happen often is they don't run too hot and too far away from them without a pullback. So, for example, the daily time frame. The daily time frame on the S&P, this is my 21 and my 50-day. The 50-day, if you go back and highlight this one, let me make this line nice and thick. So we go settings, let's go style. Let's make this as thick as possible. All right. So what I want you to see here is the 50-day, and then in red is the 200-day. Okay. The reason this is important is because what you will see is not very often does price get super, super, super far away from this blue line, the thick blue line. And when it does get far away from it, it tends to pull back and find it. So right now we are sitting at some fresh highs in the day. We're still about 280, almost 290 points away from the S&P 50-day moving average. Okay, let's make a note there. 300 points. Okay, how many times has this market gotten 300 points away? Okay, now I'm using the SPY. I can use the SPX as well, but if I go 28, 29, that's roughly equivalent to 280, 300 points. This right here was around 200 points. This right here was around 260 points. Over here this was around 250 points. Over here, oops. Over here, this was a high that was around 200 points. Okay. So have I had any example so far looking back for the last couple years that's been over 300 points? No. Okay, let's keep going. Have we hit 300 points? There's 250 points, 240 points. How about here? 210 points. How about over here? 210 points. Okay, again, you can see it doesn't happen very often. How about over here? 260 points. Under 90 points. And again, I mean, this entire bull run in 2021, there's no way we pulled up 200 to 300 points higher. It kept trending. It kept using it as a buy zone, but we never had a huge move. This one might be close. This is the top here, August 2020, 270 points. Okay. Look at this top. September. Seasonality wise, like we had this melt up. We had a 5-wave move. I've talked about this correlation for a while here, the last week or so. 1, 2, 3, 4, 5. Then we had an ABC correction. Well, we just had a 5-wave move. I count a 5-wave move. I'm looking for an ABC correction. This is what I'm saying. I'm not trying to time it. You know, I mean, the timing might be anytime in July, anytime in August, anytime in September would be a perfect window for the market to pull back. These COVID pullbacks, this was a 10% dip. This was an almost 9% dip, and it happened right after each other, like back-to-back pullbacks, 10%, 9%. The market still prevailed higher. I just think the market needs a little bit of a shakeout. Okay. Now, I mean, this is September. So do we have to wait? Is July going to melt up the entire time? Maybe. Is it going to be something in August or September? Maybe. But that's kind of my window. If we have a pullback, it's like now into the end of September, I expect the market to pull back. So if you look at that 50-day moving average, I mean, that was 270 points, and we pulled back straight to it. Okay, we went up again, and I mean, it was a good pullback zone. So you look at current price, fast forward to current price, and we are quite a bit above it. Like this move is 250 points above it, and we did have a pullback. Okay, this move is now around 260, 207, almost 300 points above it. We haven't had a pullback yet. So I think at the very least, it's going to be some type of snap back down to at least the 50-day moving average. And that puts us around, just that alone is about a 4.7% correction. That's why I'm saying 5 to 10% could be expected. Because we can have like a really nasty move down to the 50-day, come up here for a dead cat bounce, one more push lower, that becomes like the correction. Then it comes back up to the top again, maybe stalls and hits the lows again, but it gives us an opportunity to sell, to sell some premium from, buy support, and see if this market can then just breach the highs and then go higher. If the market's going to maintain bullishness, I mean, you're looking for a trough here or a higher low here. So here's a low, you're looking for a higher low, and then the market can run and continue to run to all-time highs. Okay. All right, MP, I appreciate that. Thanks, Lee. Thanks, Donna. Thanks, Maddie. And then Muhammad asking about the 50-day. It's the market breadth is all it is. How many stocks above the 50-day? How many stocks above the 200-day? How many stocks above the 50-day and 200-day between the S&P and the Nasdaq? What I use those for, it's a market breadth indicator. So when we're really over S5, there it is. So when it's really overbought, when I think the market is timed for like a correction, we're basically showing that a lot of stocks are up here above the 50-day moving average, or a lot of stocks are above the 200-day moving average. It doesn't happen very often, but anytime you've seen this be at the top or this be at the bottom, it's a great time to be protecting profit at the tops or buying at the bottom. They don't happen very often, but they tend to coincide in time very nicely with some awesome dips. This for 2025, this is what enabled me to buy the S&P at 496 this year, and the low was like 480 something. And this is what allowed me to buy the Qs at 410, and the low was like 403. I think. Let me double check that. So SPY, I know the lows are like 480 something. I've got a low here around 480. I bought it at 492 was my buy because of that market breadth indicator. If I go to QQQ, I bought this thing, the lows at 402. I bought this thing at 406, market breadth indicator. So for me, it's a good timing metric. Okay. All right, 62.80 on the day. If you let it cash settle for daily profit play, it stayed above our dead zone. You could have made your full $1.15 today if you kept it. I took most of the profit, got 90 bucks out of it, and I'm happy with that. So, all right, let's come back and do it again tomorrow, everybody. Sounds good? All right, see you soon. Bye.